Alrighty. It is a Monday. It is August, I think. August 6th, 2018. Good morning. Daily Forex trading strategy session. Let's take a look at the markets. Let's set up the week. Let's look at the technicals. What do you think is going to move this week? What do you guys think? I'm thinking Aussie. Dollar? Why dollar? You think CAD's going to move in Kiwi? Yeah. Well, anyways, hey, let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Oh, oil, that'd be interesting. Stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Juan's a safe haven. Why do we want a safe haven? Let me tell you, because I consider myself at least an amateur economist. I was at a store on the weekend that sells like furniture, but little knickknacks that go all over the house, and just stuff, right? This house stuff, and it's a cool store. They have a lot of interesting stuff. They were selling stuff at an unbelievable rate. They would bring a couch out and put it on display, and if you didn't buy it, as soon as you saw it, someone else was going to buy it. Like, stuff was moving at like every 10 minutes, like big stuff, $500 to $1,000 stuff. They were just moving it, boom, 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 stuff coming off the shelves, and this, that, and that. It was almost like fights breaking out. Like people guarding stuff as they move the car, and just amazing. So I forget what I bought. I bought something small, but anyway, so I go to the cash register, and they had all 10 registers open, and they're just moving it. Register 8 open, register 5 open, register 10 open, just boom, 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 boom. And they were pushing people through it. Everyone was spending money. Unbelievable. Just crazy amounts of money being spent. Everyone in America is doing fantastic. But they're certainly not looking for safe havens. Amazing stuff. Really, truly. Because, again, all you have to do is go back 5 years ago, and those stores, I don't even think that store was around 5 years ago. So anyways, I'm just blown away. Yeah, risk on, baby. The stock market's up, housing's up, poor people are rich again. What happened? Well, the marginal propensity to consume indicates that consumption will go up if income is up, and more importantly, expected future income. Well, it's not a Trump say. When every major central bank around the world, let's say 10 years ago, started to print money, each bank doing at least $1 trillion, right? Eventually, that money trickles down. So we've just done an experiment where it's taken, let's say, at least 8 years to trickle down. If you've been hanging with me for a long time, you'll remember I was using the average Juan as an example. Does anyone remember all those stories we used to talk about, the average Juan? And it was the idea that the forklift driver in a European warehouse, when that guy is buying BMWs and LG TVs for his apartment, when it trickles down to the average Juan, Europe will recover, right? Well, as far as the average Joe, it's happened here where I think I gave the example of, in America, if the warehouse worker is leasing a Cadillac Escalade and has an LG 4K TV on his apartment wall, things are going to recover. And so anyways, I'm standing there and like, it's fully recovered here. Let me tell you, this store selling $500 to $1,000 stuff just as fast as they can. That's poor people. That's rich people don't go to a place like that. So that's your average Joe. That's your middle class, right? So very, 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 very interesting. It's game on again in America. So anyway, someone else said safe haven. So I'm wondering like why? I'm not disagreeing because that means different things to different people, right? Different time, place, and people. So Americans are not looking for safe havens. They're spending money. They're maxing out their credit cards again. They're spending money again. Um, Car sales are probably going to boom soon again. Um, where just a few years ago they were paying down debt and saving because they were worried about the future. Didn't look like that was happening now. But anyways, let me go back to the disclaimer. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. So please stay small, stay humble, focus on the long term, and never risk when you cannot afford to lose. Yeah, Juan says they're adding more debt. Well, we don't know that. But that is something a poor person does, right? By definition, you would buy stuff that doesn't go up in value on using credit. What does a wealthy person do? They use debt. No. Saving is guaranteed poverty. You can't save your way to wealth. Okay. A wealthy person uses debt to buy a cash flow, whether it's a house that goes up in value that you can rent or an apartment building that you can, you borrow, let's say, $5 million from a bank to buy a 6-unit apartment that you can rent out. And, the bank gave you the money. You're just collecting the cash flow and paying the bank back and all that kind of stuff. But you're buying a cash flow. If you invest money into a bond, if you buy stock, these are cash flows. You get paid whether you get out of bed or not, right? A poor person will buy what? That doesn't have a cash flow. And even worse, depreciates, like a car. Yeah, a Mustang, even very, very well said. I love that, right? Yeah, if it was on a credit card, that has a good return on value, right? Yeah. If a person has a car payment on a 500 horsepower Mustang, you're like, dude, just the minute you drive that onto the street, it's lost 50% in value because nobody wants a 500 horsepower Mustang. Anyways, so that's the true real difference. And you might get upset at me, Wayne talks about poor people or Wayne talks about middle class. I'm like, dude, just look at the aggregate. Wealthy people, they invest or borrow to acquire cash flow. And everybody else is poor. And I mean everybody else is poor. So anyway, if you have a job, you're poor. The truth hurts, right? Yeah. So anyways, let's just go. Oh, hi. My name is Wayne. Nice to meet you. Hello. How about this? Hi, my name is Wayne McDonell. I am the Chief FX Market Strategist for TradersWay. Good to see you. I'm here to help you learn how to put trade plans together. We're in a very exciting period of time. The market is just slowly waking up to the rest of the year. Yeah, Ellsworth is right. People need cars to get to work, right? I don't own a car. There you go, right? I don't own a car. And the other funny thing is I have a golf cart and it's not working. I don't know, it's not charging, but I don't have time to fix it. So I ain't going anywhere. What do? I don't go anywhere. But anyways, this is it. It's just you and me all day, every day. Super happy with that, by the way. How do I get my charts? Desktop chart. There you go. Is that right? What cars do you have going up in value, Johnny? All right. Why is it being an E39M Sport? I don't even know what the heck that is. '65 Malibu SS. Wow. Nice. Yeah, the E39M. Huh. What year is it? Anyways, we got to move on. That's interesting. I've owned something like 200 cars, so I should know them. Anyways, la la. Year 2001 E. What country are you in? Anyways, looking at this Aussie yen, we're still stuck in the middle. Did anyone read the Commitment of Traders report? Maybe we should just do that together. You know, it's been so long. I'm sure you've studied it over the weekend. US, it's a rare car. It must be, dude. An E, so it's an electric? Hence appreciating. Well, people do need to know about it though, right, John? It's electric, huh? Yeah, 1990 Honda X's 100 cc's. My lawnmower probably has more than that. Well, it's not technically I own a tractor. Technically, it's a tractor. It's 21 horsepower. Anything more than 20 horsepower. Okay, interesting. I'll have to look that up, John. Cool. All right, so what I'm getting to is I'm sure you've already reviewed the Commitment of Traders report. I reviewed for like the one I have in mind is Aussie, and Aussie went net short. So this light blue minus the gray is black, and let me get my drawing tool. We're going to use the blue line as a water line. The water line's here. Okay. So anyways, we have definite movement on the bearish side. Okay, this black line down here means more people are short than long. That's interesting, right? This gray area, let me use a red to represent this one. This gray line are long positions, week over week over week. So since March, every week there's less people long. Wish we had green in my drawing tool. I should probably request it. And then this line here are sellers. And the point that I'm getting to is this area here in yellow. Let me redraw the blue line. Indicates that just recently there's an increase in sellers as along with a decrease in buyers. Okay? So what does that mean, Basil? There might be a change because remember, this is just people coming back from summer holidays and they decided to short the Aussie. They didn't decide to buy. In fact, more people got out of their longs. But all of a sudden, a reasonable number of contracts have sold, right? Now, if you look at it, I mean, we're way up here now, number of contracts, right? And we spike from here to here. So there might be something going on, and we may want to, I guess we should do this, we may want to pay attention over the coming weeks to see if that is a new trend that is continuing. Less people long, more people short. So, can you think of any reasons why Aussie dollars should fall? Why would these hedge funds start selling Aussie dollar? Gold, okay. U.S. rates, well, why would that affect the the Australian dollar? China slowed down. Okay, well, there has to be a little more specific than that. Copper, that's interesting, Guy. I wouldn't have thought that. Less imports. Okay, get more specific, of course. They're expecting a downturn, maybe. Trade war, yes, Mickey, that would definitely be part of it. The concerns about trade wars between China and the United States, that would be it. Okay, so iron ore. Charles says iron ore, but iron ore is up. Well, I believe, now correct me if I'm wrong because it's not something I follow, but iron ore is up 6% for the year. Does that sound about right, Charles? Iron ore year to date is up 6%. But here's the problem. Now that it's up 6%, it's now 50% cheaper than 4 years ago or 5 years ago. What? Yeah, iron ore is so up in value, it's now half of what it used to be. So I might be wrong in that, but I think we're something in that situation, right? So, anyways, the RBA, that's a better answer as well. What does the RBA say? Rates on hold until next year at least, right? Right. So, would you label the RBA as dovish, neutral, or hawkish? Yeah. Okay. A lot of people. Okay, neutral. So if you thought dovish, then you would have a negative rate or a negative view for the Australian dollar. Okay. Iron ore is the #1 export for Australia, and even though it's positive for the year, over the short run, or let's say over the last 5 years, it's still significantly down. Iron ore price. Let's see what happens here. Okay. By the way, one of the things I read, somebody, and I don't remember who, so I apologize for that. I can't source it. I can't cite it properly. But their outlook for iron ore in the next 12 months is it drops to $51. So that would also be a problem, wouldn't it? Okay, so this year looks like iron ore prices are way up. I can't see that. What does it say? 8%? Sorry, I said 6%. My bad. It's up year to date 8%. Okay. But if we go, let's move this to 2004. Yeah, that's where we are, down 53%. All right, so I'm a little off. I said 6 and it was 8, and I said 50% and it's 53%. So, but anyways, we're not nearly where we used to be, right? Are you guys tracking this stuff this closely, mentally, where you can sit down and have an intelligent conversation with potential investors? Like, well, yeah, iron ore is up 8% year to date, but really is still half of what it used to be. And therefore, this is probably going to affect demand for commodities out of Australia, or if not demand, just how much money they're going to spend. And so that, that lowers your outlook for the Aussie dollar, at least in the near term, especially if some analysts are correct and iron ore prices are going to drop from the 60s down into the low 50s. You should be able to do it, right? Right. So, Peter, that you could do some research now. You could do some technical analysis and say, if we're in a range over the last what is this, 16? Let's do it. Okay. As we approach a certain price, you might be able to say, okay, bottom and top. So if it goes up to like 75, it might come back down to 50, right? Or you say this is printed a bottom and it's going to go from here to here, but that's going to affect, right? So you're correct. If your analysis tells you iron ore prices are not going to drop to 50, but instead go to 80, right? Right? That could be something. Anyways, make that part of your analysis. That'd be really cool. So, anyways, that's one thing that's been on my mind. So, will this go up or will it go down? Yeah, good question. Okay, is anyone a bull after all of that? Is anyone a bull? Does anyone think iron ore is going to go to 80? I mean, in 12 months. You don't even have to really time it. You just have to be, is it going to go up or is it going to go down? What's going on in the Bank of Japan? Are they going to raise interest rates in the next year? No, yeah, maybe 2 years? Okay. Everyone says they don't think so. Okay. So then why don't you say, how about this? Even if Aussie remains weak, maybe even just neutral. And Japan is the one you're solid on, right? You guys are saying even in the next 24 months, they're not going to raise interest rates. Okay. All right. In that case, even if you're neutral on Aussie, Should Aussie yen go up or down in the next 12 months? So you're a bull. Yeah, and FX Ambassador, he's specifically talking about the 10-year T-note, not Fed funds rate. Yeah. It's misleading, isn't it? I don't know what article you read, but they're probably all the same articles. And if you read it, you're like, oh my God, interest rates are going to, but he's not talking Fed funds rate. He's talking, yeah, that's the 10-year. Right. Well, we've hit, I think it's been 3 times now, we've made a solid charge at the 3.0 level. I think we even hit 3.1 for a week or two and then collapsed. They took them apart on Bloomberg. Oh, really? Yeah, I haven't. Yeah, I haven't done anything today. I tend to not even watch TV anymore. RBA specifically said we're taking a drop in unemployment. Yeah. Okay. So, anyways, what I'm trying to get to is that even with some uncertainty, you can still put together a trade plan and certainly a bias. So if you thought, how about this? Let me change it. It looked like most people thought Aussie yen would go up in the next 12 months. How about in the next 6 months? How about between now and December 31st? Are you a buyer of this or a seller? Okay. Lots of buyers. Expecting now, but yeah, well, that's a timing issue, but that's why God invented stop losses. Because you could say, well, I want it to fall further and never get in a trade. Now, how about this? If the market's falling and you're a buyer, standing aside is probably a good idea, right? Ted said that, right, Ted? Okay, that's cool, right, Ted? But is this a falling market right now? Ted? Teddy boy? There, he's ready. No. All right, so what's your job now as a trader then? The market's not falling and you're a bull. As a bull, your job is to identify the next 2 levels of support in which you will buy. On the way down, that's a little dangerous because now you're looking for levels of support in which you're looking for reversal patterns. Well, here you don't even really need a reversal pattern. You need support and then some sort of tactical entry on a 15-minute chart or a 5-minute chart. But, well, FX Ambassadors to stand aside. Well, that's not what you get paid for. Think of it as a job. Okay? Okay, the thing clients hate the most are losses. But you know what's a close second? Besides losses? Inaction, zero profit, sleep. But there's something more specific. It's not that you didn't make money, because that's opportunity cost. They could have given it to some other idiot and he might have lost money. He might have made money. We don't know. They hate management fees. Even worse, paying you to do nothing. Oh my God. They're paying you 2% of their, right? To do nothing. They'll fight you tooth and nail on this, by the way. You'll say, we have a 2% management fee. I don't want to pay a management fee. That's the first thing you're going to hear. Anyways, you got to earn a management fee, otherwise you're desperate. If you're desperate, you're going to lose. So anyways, let's go back to this. Your job now, they are paying you money to get into opportunities. Now, they also want you to manage risk, right? So buying a falling market is too risky. But a sideways market, buying at support, that will be up to you to debate whether that's good or not. But I would argue that if you can get into the trade at support, I mean, sure, we might be in the middle of this range here, but if you have support and you get the opportunity, take a shot. Then manage it. Do your job. Manage the risk. Okay? Well, smaller positions with a large, that's one way of doing it. But let's go back and let me zoom in a little bit here. Okay? What's the trade plan for the month if you're a bull? We talked about it last week and the week before even. Okay? Okay, what's the trade plan for the week if you're a bull? Okay. Yeah, swing traders know this one. This one's easy. It just gets you to the next risk level, and that's where all the bears are going to sell. So this is going to be like up this week, down next week is probably what's going to happen. But going back to Ted and going back to someone else that said, you know, step aside, it might have been Ambassador. You have an opportunity here where you have a weekly and a monthly entry if you know how to swing trade. And if you don't take that, your client's going to say, well, why did I pay you money then? Like, what is it that you do? You have a double confirmed entry, right? Oh, hey, Calvin, I want to hit Calvin saying, Wayne, isn't yen supposed to be strong for the next week, 3 weeks? Do not think that way. Do not say stuff like that, okay? And I'll tell you why. The yen can do whatever the hell it wants. And I'm using swearing to emphasize. Every once in a while, I'll drop an F-bomb, and my wife's like, you don't have to speak like that. I'm like, well, I'm just emphasizing how much this is. You don't have to talk that way. All right, well, I'm emphasizing here that it can do whatever it wants, whenever it wants. So don't get in the idea like Wayne said it's going to weaken in the third week of August. Therefore, it's got to be strong until the third week of August, and then it has to turn weak. First of all, I can be completely, totally wrong. Right, Calvin? And then second of all, I can be totally right, but 3, 4, 5 weeks off, which means it can move 3 or 4 or 5 weeks early or 3 or 4 or 5 weeks late. Like, I don't know if this is the bottom. In fact, this might have been the bottom of 2018. See, I don't know anything. I just have a theory and a plan. And I have some historic context to say, well, very often this is true. But very often this could be the third week of September. But it could also be the third week of July. We don't know really. So therefore, we have to analyze the market. And that's where I want you, that's how I want you to think. You have a hypothesis, whatever the hypothesis is, right? Use scientific methodology. You have a hypothesis, and then you test it with analysis to confirm or deny your hypothesis, right? This is how you would do genetic science. This is how you would do chemistry, right? So if it's good enough for a geneticist, it's good enough for me. This is how I want you to look at the market, okay? The worst thing you can do is, well, it's supposed to do this and it's supposed to do that. And that's where you can get really into trouble. because people tend to get so tied to the hypotheses that they don't see they're wrong. And even they stay in a bad trade, or even worse, they add to a bad trade. Okay? Yeah. So I know I made I made a big thing out of a small comment that you made, but hopefully you get it. Okay. So going back to this, if you guys are bullish, and you can give me intellectual reasons why, not emotional, intellectual reasons why, like we did with the conversation. You could say, well, I looked at the commitment of traders report, and yes, I see net shorts are spiking, but that to me points out a turning point in the market where there's so many people short that when the fundamentals kick in, everyone's going to get out of that short quickly. They're confusing the lull in the market with economic decision making at the RBA. See, like that could be what you say. It could be total garbage, total nonsense, but at least you better have something that sounds plausible and well researched and founded, right? So anyways, if you think this is going up and you're at support, and that's not just random support, both of these are good support, right? Then you need to be long, bro. And you need to, and then if you're worried about it, manage the risk. I think it's worse to not be in the trade when you have a setup, because I think there is a setup here. I think this is set up. I think you had a trade 12 hours ago when the market opened. I think you could have taken a trade last week. I mean, I did talk about it before, non-farm payrolls. Okay. And then what if you're wrong? Well, you might break even. You might lose some money. Hell, you might even make some money and be wrong. But the next one's down here, right? Maybe even like this. I didn't mean to do this one. This is what I want. This actually looks like more of a bottom currently, right? You see what I mean? All right, Johnny is a perma bear and have very little. Well, you're a perma bear on what? That'll help me understand. What are you a perma bear on? It's like I said, like that doesn't even make sense, because whenever you're a bear on something, you're actually bullish. But like, again, going back to that story where I'm shopping over the weekend, oh my God, everybody was filthy, stinking rich. Right? So you're a perma bull and don't even know it. Because that's the cool thing about Forex, right? If you're a stock trader and you're always shorting the stocks and stock market and stuff, okay, you're a perma bear. But if you're constantly shorting the Aussie yen, well, you're actually only shorting Aussie and you're actually bullish on the yen, right? So that's why I had to ask you, because it doesn't mean anything for me when you say you're a perma bear. Okay, on what, right? On global macroeconomics? Yeah, you could say you think the booming, because I think we're at that point now where from here on in, the U.S. economy is going to overheat. Okay, but it's booming here. Poor people are rich in America. Crazy. You can't even get into a restaurant on a Friday or Saturday night. Shoot, probably even a Wednesday night. I don't know. I never leave the house. But just drive by, like, drive by like the Outback Steakhouse or Chili's or something, right? Yeah, Red Lobster, these god-awful restaurants, right? These horrible, horrible. What's the other funny one? Olive Garden. You're like, oh my God, people eat in this place. But anyways, you can't even get in the parking lot. Okay, so it's booming here, but you could argue that it's all on Fed money. I think I was getting to this point and then got sidetracked earlier, but each of the major central banks have spent at least $1 trillion. Actually, several trillion would be closer to the truth each in dollar terms. So 100 bajillion yen, there's euro, there's dollar, and all this kind of stuff, right? Eventually it trickles down. It's got to go somewhere. So it first enters the financial economy, right? And then it enters the real economy. Because it's got to go from the Fed to the bond dealer's bank account, from the bond dealer's bank account to a loan, 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 right? And at some point, the average Joe on the street's got money. And he's looking around. His job's better than 10 years ago, he didn't have a job. 5 years ago, he finally got a half-decent job, but it was the job he was doing 10 years before that. But now, the job's pretty good again. He's going to get a promotion because they're hiring more junior people. Great. So feels good about the future. His retirement account is up. The value of his house is up. He's not underwater anymore. He's got 3 or 4 credit cards, right? And they're increasing his credits rating, or what do you call it? Credit line. So this is the average person in America now. Okay? And people wonder, like, very often I hear arguments where they'll say, okay, but wages haven't gone up in 25 years. Why is that like not a valid argument? Right? Why is there so low inflation since the 1970s? Why has there been low inflation in the 80s, low inflation in the 90s, low inflation in the 00s, low inflation now? And why have wages not gone up in the United States? Well, maybe it's attached to low inflation. It's not a mature economy, because mature economies, well, I guess, but that's not where I'm going. It's not true, because structural competition, well, okay, that's what it is. What you're looking at is globalization. And so there are people, now that we're global, there are other people in other countries that are able and willing to work at a lower wage. Okay, so that lowers wages in the developed world as well as the developing world, right? So the developing world will work cheaper. So therefore, wages don't go up, because the higher the wages go up in the United States, the more likely you're going to buy something for foreign countries. But so wages haven't gone up in 25 years in the United States. They've skyrocketed in other places, like in China and others, right? But 25 years ago, people didn't have like 100, or I guess they don't have 100-inch, right? 65-inch 4K TVs on their walls, right? For example, your dollar buys more now than it did 25 years ago. So relatively speaking, wages did go up because you have more crap. And in the United States, we live in a consumer-oriented economy. So the game is, the more crap you have, the happier you are, right? right? That's just the American way. I'm not saying it's the right way, it's just the American way. So if workers in another part of the world can make stuff for you and then sell it to you for cheap so that you have a higher standard of living, you don't make any more money, but you have a higher standard of living. So a lot of people would argue that that's better. So most things in our consumer economy have fallen in price. So that's why inflation is low. That's why wages don't have to go up, because why do wages have to go up if you're actually better off than you used to be? Now, some people argue you're not better off than you used to be. So what's gone up in price? Healthcare, education, what else? Healthcare, education, energy? Yeah. Food food. Yeah, it's interesting, like ground beef now. You notice that ground beef is like $6.99 at the grocery store? What was it 10 years ago or 20 years ago? It was like $1.99, right? It was like ground beef was dog food, wasn't it? And now I'm like, that used to be a steak. You used to be able to buy New York strip for $7.99. How about this? I bought prime New York strip. It was almost a pound, and it cost me $10.99, I think it was, for prime, right? Yeah, Ted says technology advantage. Yeah, so like as an entrepreneur now, if you gave me 10 guys and 10 computers and an internet connection, I can do as much with 10 guys as probably 40, 50 people used to be able to do. Right? So, okay, so I guess food and energy, health, and what was the other one? Education. Those things have gone up, and everything else has actually gone down. Okay. Also, the way that you can track this is you can look at the basket. Have you guys ever compared the basket between CPI and PCE? I'm sure you have. And then you've compared the different mathematical formulas. I'm sure you have. You can break these things down and say, okay, marginal propensity to consume is going to equal some sort of CPI, right? So let's say 70% of every dollar people are paid, they spend. What do they spend their money on? 1/3 is product, 2/3 is services. So services have what? Education, healthcare. You see what I mean? So therefore, the product side must have be way, 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 way lower if those services have gone up and the products have gone down, but more money is spent on services, but yet we don't have any inflation, then basically compared to before, your TV is practically free. It's just the per inch, the cost per inch. Your 65-inch 4K TV is cheaper per inch than that box you used to have that sat on your dresser. It was 27-inch with a big curve on it, right? Remember those things? Your 4:3 aspect ratio. I remember watching the Chicago Bulls in the 90s, right? Chicago Bulls, dream team. And you couldn't ever tell which guy was Michael Jordan. Not because I'm racist, because you're looking at the TV. You're like, oh, they're passing to Jordan. You're like, that, no, 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 that's Horace Grant. You're like, that's Horace Grant? You're like, what? The bald black guy. Oh, there's two bald black guys on there. Oh, man. But it was because the TV was curved and it was small and, you know, it was just terrible quality. But that TV was more expensive than what you get now. Yeah, so anyways, you know, we're talking some pretty, we started on some macro level stuff. Now we're talking micro level stuff. But again, during these quiet period of time, I'm challenging you to think. I know I'm supposed to get you all excited about trading, throw you in a bunch of trades, trade. But this is an opportunity, if I'm going to truly be your coach, be your mentor, you need to think about macroeconomics and microeconomics, and more importantly, what does this mean for your outlook? Where are interest rates going in the United States? What will that mean? What will happen to the dollar when other major currencies start raising their interest rates? Because there's this idea that it's not just interest rates going up, it's interest rates relative. Okay. So three people said it would fall. Okay. Is there any major central bank thinking about raising interest rates or actually doing it? Well, Euro is 2 years from now, right? Canada, England, United Kingdom, Australia? No, you just shut that down. Japan? No, you just shut that down. What about New Zealand? Maybe? But Canada and the United Kingdom. Okay. Yeah, well, yeah, New Zealand wants a weak currency, but I don't know. I guess I've been doing this so long, John, that it makes me laugh a little bit because they'll always say that. They always say it. And New Zealand's funny because they'll say it and then raise interest rates. They typically raise them further than most. I've seen, like, I've lived through at least two, how do you say it, interventions by the Reserve Bank of New Zealand, at least two. And the funny thing is, of course, it doesn't work, right? It's funny. So New Zealand will say that, and they believe it, and it's it is true. But at some point, when the world kind of right sides itself, so maybe it's not this year, right, John? But maybe it's next year when Europe starts raising interest rates, when consumption starts picking up. So remember, I think we talked about this a week ago. Net exports are at a multi-year high in Europe right now, in the European zone. Why is that? And just as a hint, we talked about this 5 years ago when we were having these conversations about the average yuan. So it's not like some new thing I just made up. The average yuan, the forklift driver in a factory in Spain. Yeah, well, John, of course he did, because he doesn't want the negative effects. So he's doing his job. Okay. Net exports at a multi-year high in the Eurozone. Well, what's the formula for net exports? X minus M. So how do you get high net exports? I hear crickets now. Low imports, thank you. Well, you could have said lots of exports, right? Like Frank said, more X than M. But so then you would say, oh my God, Europe is booming, right? But is Europe booming? No. So the retarded idea of austerity has finally reared its ugly head. So now they have an economy where the Europeans are so poor and probably so unemployed. How'd you like to be unemployed for 10 years, right? That they're not even buying stuff from China. It's the opposite of what I experienced over the weekend, where the store has to have all 10 cash registers open, and they're just selling stuff as fast as they can get people through. It was crazy. So all of it's imported, all of it. I live in Georgia, where they used to make things like stuff out of cotton, right? T-shirts, towels, I don't know. It's all gone. All of it's gone. There's nothing in Georgia anymore related to that. There's no factories in Georgia anymore, right? So all that crap at that store was imported. But if you looked at that and saw how much was being spent, and I'm not joking, the velocity at which things were being spent, they would bring out a couch, boom, and I swear to you, you had 15 or 20 minutes to think about it and measure it and sit on it and buy it, or someone else was going to buy it like crazy, right? Like, oh my God, it was like a mad fest. Nothing was on super sale. It was just, right? So I'm looking at these two Tommy Hilfiger chairs. They were cool because they had the same fabric, but they were different shapes. One was sort of a lower club chair, and the other one was a high back. I thought, oh, that's cool. I like how they're the same, but they're different shapes. I kind of like that. Like they're mixed matched, but they're matchy at the same time. And they're Tommy Hilfiger furniture, right? So I'm like looking at it, and I'm waiting for my wife. I'm like, hey, I want to show her these two chairs. And some woman came over and bought one of the damn chairs. I'm like, that's it. I missed out. Oh my God, my wife was on the other side of the store. She's like, you gotta go, man. But it's all imported, right? Tommy Hilfiger doesn't make home furniture in the United States. Are you kidding me? So, but reverse that. If we're at record high net exports in Europe, it's because nobody in Europe is buying stuff. They're just buying cheese from, not even Swiss cheese. They're buying French cheese, right? And some Gouda, some Dutch cheese, maybe some German cheese. And then what? They're spending it on services. If you go just reverse engineer the whole conversation with CPI, but they're not importing because they don't have any money. What are they buying? The stuff they have to have. Local food, local services, and that's it. So you're like, well, Wayne, why the heck are we talking about this? Well, first of all, look at my Aussie Ed chart. Still nothing's happened in the hour that we've been talking, right? What about 3 years from now? What? What about 3 years from now? Will that still be the same? John says probably. You know what? I may even buy that. Would you hope? Yeah. This is great. Probably, no, and I don't know. Great answer. That is the market. Paul says worse. I would say if the United States turns, okay, Paul, then you have the. I mean, I wouldn't think that way. You have to analyze. You'd have to show me data. So I don't think it'll be worse, but it totally could be. But you have to show me data. I don't care what your opinion is. I don't care what my opinion is. I only know what the research tells me. Now, I may misunderstand it. I might misinterpret it. I may just make the wrong decision. That's okay. But what I don't want is opinion. But I get it. It could totally be worse. Hang on, guys. I got to get this, actually. I've been waiting for this minute. All right. All right, so going back to this, if you don't think it'll be the same, if you think it'll be better, then now when? And then think about like what clues you have. Well, you have a bunch of seriously interested PhDs working at the ECB. Maybe the ECB will tell you when things are better. Maybe the ECB will tell you when the extraordinary accommodation will end and what economic indicators they're going to use to make that determination. Could you possibly get that inside information in? Yes, you could. But that would make you knowledgeable, dare I say, even an expert. And maybe you can translate that into a tradable hypothesis. Well, John says you'd have to extrapolate. Okay, how about this? Do we know when the ECB believes they're going to end quantitative easing? Do we know why they want to end quantitative easing at that period? Yeah, Charles, I told you, Charles, for years, right? But anyways. So if you know when, and you probably can know the determination for them to make that decision, and then you can then start playing around with timelines. How about this, just for thought? How long was it between when the United States tapered to zero? So there was zero quantitative easing in the United States. And how long until they raised interest rates for the first time? $18 to 24 months. Okay. Now, also, is the U.S. dollar a reserve currency? Yes or no? And by yes, that means their debt is in their own currency. Okay. Is the euro a reserve currency? Yes or no? No, which means much of their debt is not in euro. Big difference. So if the value of the dollar is going up and the value of the euro is going down, the debt burden on Eurozone in dollar terms is getting bigger and bigger and bigger, and they're not getting extra spending for that. You know what I mean? So imagine you have a variable mortgage and it's $500,000, and the value of your house is falling. It's now worth $400,000, but you owe $500,000, right? You're losing money. But it could be the other way around, where it's $500,000 and your mortgage every month is going up. $3,000, $300, $3,100, $3,200, $3,300, $3,400. Is because the rate is going up. But you're not getting any extra. You're like, why do I have to pay more? I'm paying 20% more, but my house hasn't gone up in value. Like, why? Why do I have to pay more? I'm not getting anything extra. I'm not getting any extra service. Like, well, you borrowed it in foreign currency terms, and the value of that currency has gone up, or the value of our currency has gone down, or both, and you just have to pay more. And you get nothing for it. You just have less money left over to consume. So the marginal propensity to consume is the same, but the disposable income has fallen. Marginal so the disposable income, DI times MPC, is going to equal your consumption. So anyways, that could be happening to the Eurozone. But I think the way that everyone's working together now, central banks don't talk about it this way, but I kind of think they're doing it. I think there's collusion, or if not collusion, at least logic to it. I think what will happen in the next 24 months is the dollar will weaken, the euro will get stronger, and what will happen is we'll avoid that whole situation where Europe has to pay more for its debt and get nothing in return. I think what will happen is we'll end quantitative easing. There'll be a period of quietness and stabilization in Europe, and maybe less geopolitical risk out of elections and all these things that we just went through in Europe. And over the next 12 months, the euro will start to appreciate again, which means this imports will go up in Europe. Because remember, if the euro is down, you're not likely to import more if the euro is weaker, right? So the euro goes up, they start importing, right? And we start moving this other way. Okay? You see to me? Meanwhile, the Fed will continue to raise interest rates, but for entirely different. So, plan, think. So even though I'm mostly over my bronchitis and pneumonia, I think I'm going to smoke a cigar today, just because I haven't had the opportunity to think as much as I would like on this kind of stuff. Okay, but let's go back to what I was just talking about. If you're a bull on this, and somebody's paying you money to make decisions and manage the opportunities, so if you take the opportunity, you have to manage the risk. But you're at a monthly and a weekly buy zone. It's like what? What? Like, what more is it that you're looking for? Do you think Aussie yen's going to go up in the next 6 months? Yes. Are you at weekly support? Yes. Are you at monthly support? Yes. Are you going to buy it? No. Well, you're paid to take the shot. You're paid to analyze risk and opportunity and manage the risk once you take it. Passing is easy. You're definitely not going to lose money when you're not trading. But if someone's paying you to trade, you better take the shot. Up here is very risky. Up here is very risky. There's a lot of risk on this. Like I said, I think at the end of the week, if we're up here at 83.5, I believe we're going to have a very significant drop, probably like this, and we'll probably break even if you don't manage this properly. But it'll probably go from 82 to 83.5. You should be shocked if you don't make 100 pips. Oh, you got some bullies? Brooke, very cool. Yeah, I think I'm down to my last Monte Cristo, so I'm going to have to order some new stuff. Okay. Housekeeping stuff. Is everyone signed up for either the all-course bundle at FX Bootcamp or the swing trading course? Because I have to launch the swing trading course soon. Not the course, sorry, the group. We got to start preparing soon. There was a coupon given at the FX Street NFP. I didn't plan for that. It just somehow came out. And that coupon expires. So I don't know if you ever need that. Does anybody need that? Anybody? So expires like, I think midnight. So you got to do this now. It's, let me think. I think it's NFP, VIP 148. I think that's the coupon code. So that drops it by like almost $400. That's the all course bundle. So basically you're paying for the swing trading course, but you're getting everything else for free. Yeah. But it expires like literally at midnight. So that's that. I just want to get that out of the way, but that's it. But then, so you'll have to do all the videos, and then you'll have to finish the swing trading course. Then 2 weeks from now, you'll have to sign up. Okay. Oh, you're like, right on, John. Appreciate that. All right, let's burn through some of these. Let's burn some cards. Okay. So a lot of this is just repeated from what I've already done before. This was the sell zone last week. Do you remember? Last week I said it would go down, it would go up, and then it would go down. And the target is way down below. Okay. This is actually an X. It's just the funny time frame we're on. Okay. What is the counter argument to that move? And by the way, it went down, it went up, and it has gone. What is the counter argument? Okay, because that's what a bear would think. And a bear is just thinking top, lower low, lower high, lower low. Very simple stuff. I don't know if I'm right. Who cares? What's the opposite of that? Yeah, it's this one. It's going to go from here to here. So if you were a bull now on USD CAD, I could see being a bear on a CAD. I could see being bullish on the USD, especially if it's only for a week or two, right? Well, this is the buy. Like, this is very, 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 very straightforward. If you're a bull and you're swing trading, I mean, oh my Lord, right? Now, how about this? For people that join the swing trading group, we actually swing trade on Friday because we're trying to front run Monday's trades. So some people wait till Monday or Tuesday to swing trade. We typically swing trade on a Friday. So we can be on Friday. So anyone that knows can see that that's the buy is actually Friday, bro. Bruh. Bruh. You freaked out on this? 129.70. You freaked out here? Right, that's funny. Yeah, that's annoying. What do you do? Okay. Yeah, well, you got out of a good trade. Okay, so you missed this one, but the other one is obvious though too, isn't it? The second chance. Oops. Come on. Right? Like, come on. Come on. Come on. Come on. Right? Yeah, it's funny. John doesn't like to hold over the weekends. Well, I'll change that, John. There are reasons not to, but I'll tell you what. Going back through my bajillion year history of trading Forex, there was a time when it was very frightening to hold over the weekend. And there was probably a time when I did recommend not holding over the weekend. To add to that, if you believe through your analysis, not your feeling, not your gut, but your analysis tells you that you have some serious geopolitical risk, like you think there's going to be a war over the weekend, that kind of stuff, that is also a sign not to trade. However, the market we have now is such that non-farm payrolls can come out as a surprise. The previous month can have a significant revision, and non-farm payrolls moves 42 pips. Okay. When was the last time you saw the euro dollar move 200 pips in a day? Yeah, yeah, Brexit, right? How about 200 pips in an hour? And even then, it's hard to believe. December 2016, I think. Even that, I don't even think it's true. So when was the last time you saw a significant gap over the weekend? More than 50 pip gap. Brooke remembers clearly. Okay. All right. Well, okay. So, yeah, well, usually it is less, right? And you're what I'm thinking, because I don't know you and I haven't reviewed your trade history, but going back to our earlier conversations when you kind of first joined the TradersWay team, was that you have primarily shorter term trades, your stuff was primarily closer, and one of the things that you and I were going to work on was that you're going to have, larger stops and medium term trades and stuff, right? And I think you're carrying some baggage back from the old days. Because in the old days, you would get unlucky and bad things would happen and you would be in a good trade but take a loss. And like all I'm challenging, because I don't, like I said, I don't know you, I don't know your history, I don't know your trading and all that. But maybe go back and look through the last 3 years of your trading and look through 3 years of weekend, Monday gaps and see what kind of threat under this new style of trading that you're testing, if you will, puts you in some sort of realistic jeopardy. And my my guess, and again, it's only a guess, but I'm bringing my baggage along now. I've seen the market change over 15 years of watching the market every single day, all day, every day. And this is a gap that is pretty typical. Even that's a pretty big gap, actually. Even often there isn't even a gap. Even on like euro dollar may not even gap at all. The old days that I was worried about is like 200 pip gaps. 200 pip gaps. $200 pip. Now, if you see a 20 pip gap, that's a big gap, right? So so here's my logic here. Let's bring it around. Okay, let's put a ribbon on this, or repack it, if you will. If after your analysis you find that significant gap risk is pretty negligible, then there may be an opportunity where you can enter next week's trade on a Thursday or a Friday of this week, be able to have your stop at a reasonable place. Maybe even by Friday afternoon, you're able to move your stop to break even or near break even. And that Monday, your plan more often than not, or in this case, I think almost always, will tempt to move, right? Where the old logic says you can't place Monday's trade in the market on Friday. The new logic, the modern form of trading, in such a mature market now where there's very little gaps or no gap at all, that if you see Monday's trade, and it's a Friday, you can. Okay? Well, right on, John. I hope it brings you fabulous confidence and maybe even some wealth. Okay? So that's what I've noticed over the years, that there has been a change. That's my point of view. And I honestly believe it's factual. Whether it's true or not, who knows? But I honestly believe it. So if you are a bull and you are on a bullish entry on a Friday, unless you think there's some sort of real true risk over this particular weekend, like a political election, like a war, those are the things that happen. Then, barring all of that, you could probably take a shot. Okay? Or here's what I used to do back in the day. I would try it for a year. Right? Try it for a year. Wow. So anyways, lots to think about today. I don't even have time. Yeah, so I went way over. I got up even earlier today for you guys. So maybe it makes up a little bit for being sick the last 2 weeks. But all right, so lots to think about. I hope you guys have spent time on a planning retreat. I hope you have spent time cruising through central banking websites. I hope you are thinking about macro and microeconomic concerns. I hope you are thinking about the next 6 months to a year. I hope you're thinking about your tradable point of view. I hope you are not being lulled by quiet markets, because we know those who don't succeed look at markets like this and they get very upset and they get very emotional. I'm so emotional. Yet we're trying to be as intellectual as possible and putting these things together so that when the markets return, we're already sharp as a ninja sword. Oh, you mean learning the ins and outs of NT4? I would go to YouTube. Yeah. Well, the trial and error part is actually, I think, very necessary because you have to master your platform. After a while, you got to be a master of your domain. So spending hours looking for EAs and installing EAs and uninstalling the EAs. And I don't know how many times I've been downloaded and installed MT4 and had to install templates and indicators and stuff, but it's all part of it, right? The risk manager. Yeah, you're talking about 2004, I think, the risk manager. Brooke, that is so long ago. I think it became obsolete around Windows Vista. like, like I don't think Windows Vista supported her. So I'm sorry, bruh. Um, yeah. Is anyone going to sign up for the all course package with the coupon code today? Because if you are, then I'm going to be worried that it works and that I gave you the right coupon code and all that kind of stuff. If no one's going to do it, that's fine. I'll just go worry about something else. But I want to make sure everyone's taken care of because in 2 weeks, we need to start trading for the rest of the year. And if you're going to be part of the swing trading course, you have to have that completed. You cannot buy, like it will not let you. You can put it in your shopping cart and stuff. But when you go to buy this swing trading group, the live trading group, it'll say, oh, wait, you haven't completed the swing trading course. And you'll be denied. And you're like, but wait, no, I'm going to miss the first week or two. And even worse, what will happen is you'll burn through the course as fast as possible, which means you won't learn anything. And then you'll jump into our group. Anyways, so everyone's good? Not sure? Okay, lots of people do it. Notice though, also to the swing trading group, notice the price is higher this time because it's an extra month and a half. Like it's like an extra 5 weeks more than before. So the price is a little bit higher. Well, I think you understand, right? No, it won't. It's not active after 2 years. Um, uh, you know, yeah, it's not active after 2 years. Uh, just email me and we'll work something out. If you're going to redo everything, yeah, we'll work something out. I'm a fair dude. Yeah, I think I said 6 months, and then some people freaked out because it took them longer than 6 months. So I think it's actually a year now that it expires. But it's ridiculously more than enough. All right, so no one's going to sign up. Okay, cool. I won't worry about it. I'm going to go outside and uh, melt. Are there new videos? Yeah, quite a few, especially if you're in the swing trading course stuff. But, yeah, no, John, that wouldn't be cool. That would be a little bit not cool. Yeah. All right, cool. Everyone's fine. Great. That's all I need. Everyone's fine. That's all I care about. All right. Peace on earth. May the pips be with you. May our profits be above average. I'm going to contact the crew at TradersWay and start setting up a time to do the day trading course that I haven't been able to do since I've been sick. with pneumonia. So I'm going to start planning that as well for them. So, anyways, sorry I dragged on too long today, but I think we've been behind on some fundamentals for a while. I'll see you tomorrow. Thanks for being a client of TradersWay. I appreciate you. Cheers. See you Tuesday.